6 to 9 a.m.
Good morning, Cape Town. Only with Lester Kibbet
on CapeTalk.
20 minutes to 7 o'clock. We talk money on a Monday. And gone are the days when one job or your pension was enough to get you through a month. More people are turning to side hustles in addition to their day jobs in order to make enough money to get them through the month. In fact, there are various numbers depending on which source and survey, but the estimates suggest that something like between 30 and 57% of employed South Africans have side hustles or multiple income streams. But what does this mean for your tax compliance? What does this mean from the tax man coming to you and saying, you have two jobs, let me take a little more? Let me speak to Nicolas Botha, who's a tax team compliance manager at Tax Consulting SA. Good morning, Nicolas. Really appreciate your time. Firstly, maybe you could just explain the general tax layout on what the tax regulations say on having maybe a full-time job and then maybe a part-time or freelance gig, or maybe you have a little side hustle that's bringing a little bit of income. What does the tax man say?
Well, thanks. Morning, Lester. So when it comes to income in South Africa, it's very important that you obviously declare what you receive. So when it comes to side hustles and other sources of income, firstly, what we have to look at is what's the source of that income? What are you particularly doing? Is it investment income? Is it just working another job? What is the foundation behind those earnings? And then that will have relevant tax effects. So if we're looking at, just having another source of income, let's call it a waitress job on the side, that income gets added to your standard salary, and then you would be taxed on that at a similar rate. Or if that then takes you into a new tax bracket, you would have a higher rate. So very important to have that declared and shown accordingly to SARS.
What about cash sales? There's not necessarily, I don't know, do restaurants monitor and declare how much they share in tips? Or maybe you have a cash business, you're selling takeaways or cookies and you're getting a fair bit of income. Of course you have to declare that cash, but to what point are you generally okay with keeping that quiet? Or does the tax man say, no, everything that you get, whether it be a cash sale or a tip, you have to declare?
So everything would need to be declared. So there's no point of that it's below a radar threshold. In terms of the letter of the law, that income must be declared regardless of the amount. And when it comes to those sources of income, they typically aren't subject to pay as you earn. So it's not going to be deducted by the restaurant or through the pay as you earn system, and that typically triggers that provisional tax obligation. Where you then go forward to SARS and inform them on the income, whether it's received by a bank account or cash.
What about pensioners? I know of a few teachers who have officially retired from the public service, but then you've had the schools or even the departments say, come back and maybe be a substitute teacher or maybe teach adult basic education. Many of them have then been bitten by the tax man because, hey, you're supposed to be a pensioner. You're not supposed to be getting any added extra income.
Yeah, so as a pensioner, you're more than welcome to earn that extra income. It's just important to declare it correctly. So standardly, what we see happen is that as a pensioner, your pension will be subject, to withholding taxes. So you would get the receipts, post tax. And then now if you've got that additional income, you then would declare those earnings, and that would then fall under the relevant tax bracket. So the nice benefit for pensioners is that all South Africans get your primary rebate, which is, basically gives you a tax-free window of approximately 90,000 Rand. And then if you're above 65, that moves up, quite a bit. And then if you're above 75, it moves up again. So there is a tax-free window in terms of the primary, secondary, and tertiary rebates, but the income needs to be declared to show that you're either falling below or above those those thresholds. And then if you're above, you would then be subject to the normal 18 to 45% tax rates.
Nicholas, would you say that the current tax regimen is one either discouraging people from seeking side hustles? Let's be honest, very few people's monthly income gets them through a month comfortably. Secondly, is it also discouraging people to maybe declare extra income? We're living in a global world where it's more than one job, it's more than one income stream that's going to get people through the month. What is your commentary on how our current tax regimen is written and structured and addresses a new world where people are looking at side gigs and hustles more?
Yeah, so I mean, from my side, I tend to stray a bit from the political side of it. You know, we see it that you know it's applied treatment to everyone. You know, so depending on the source of income, you know, if it's the same income as the person next to you, your tax treatment becomes, you know, equal. And SARS always wants the bit of change in terms of it. And yeah, it's unfortunately the reality we sit with.
Denise asks, what about people over 70 but who get SASSA and do a little house sitting on the side?
Yes, I mean, it again depends on the amount of income. So how we look at the tax, we look at the tax year. And we look from the period of March until February, how much income did you receive in that year from your various sources. Those all get added together and then get taxed at according the applicable rates. So, I mean, if you're house sitting, you're on SASSA, and it's not above, you know, that around about 100 or so thousand rand, you're not going to pay any taxes on it. But again, for compliance, important to then declare that and show that you are below those thresholds.
What about people who generally do extra work in the associated industry or sector? Some have argued, well, you register yourself as some sort of CC, register yourself as some sort of business or company, get a business registration, and you tax through that. You file through that business filing. Is that advisable?
Again, it's all dependent, you know. So there's a lot of you know, processing, and there's still taxes within a structure. So that's where careful tax planning comes into play, you know. A lot of people will just shoot off the hip and say, you know, that's the best way to go, and then not look at the actual costs behind setting up a company, structuring it, you know, the accounting costs, and then the relevant taxes within that company that sometimes might be more detrimental to you. So definitely not a no towards it, but careful consideration is needed before you run into it.
Really appreciate your time, Nicolas Botha, on this Money on a Mondays with Tax Consulting. Say, what's your side hustle? We have